Not a bad day if you're a bull and you're looking at what the markets have largely done per se. It's been steady. This could well have been the intraday line for the Nifty because we started off 0.5% higher and we are about 0.5% higher. There's been virtually no change. Small gyrations here and there, but the markets have largely stayed steady in the session today. Nifty Bank about 0.5% too. The broader markets started off well, nearly 1% for the small cap and about slightly less than 1% for the mid caps, and the mid caps are still there and the small caps are still there too. Frankly, it's been a day with less volatility. You have to look at it. I mean, just look at the intraday of any of the indices, be it the mid caps, be it the Nifty, be it the small cap, and they've largely stayed steady. So that's part one. It's been a steady day and a steady start to the week. As you can see, hardly any gyrations there. Now, get the heat map up on the screen. The components and the winners and losers, that has changed. So obviously, HDFC Bank was the sole culprit at the start of the trading day. It's still down about 1.5%. And NTPC's now joined those ranks, 2.5% lower for that one. So those two are the key culprits when it comes to the losing side. Sure, some of the commodity names, steel names, Tata Steel, JSW, etc. have pulled back, but nothing alarming. Then a rising tide, which has taken a lot of boats higher. So auto is active, BPCL, HPCL, IOC by virtue of oil prices coming off are active. There is strength in Tata Consumer ahead of the numbers day after tomorrow. There's strength in L&T and Ultratech on news for Ultratech for sure. And some of the pharma names too, the likes of Dr. Reddy's and Divi's have come back. But this is effectively the market rising in tandem and taking all stocks along with it. Not the case in the broader markets, wherein too the markets have risen, Tamanna, but a lot of stocks moving around on news and some of them correcting very sharply on news too.
Sharp corrections seen in some counters which have had negative news flow, Niraj, or even poor results.
Yes.
And just to add to the point you were making about HDFC and Wipro, HDFC was expected to be better. People were happy with the numbers. Brokerages were happy. Stock is down. Wipro, the complete opposite.
Yeah.
And stock has responded well. I would say the same also with a Persistent or a GSPL. Let me start with a GSPL in, one of the stocks that should be on your radar this afternoon and has had quite a tough day, if I do say so myself, over 19% down. So it started with the authority cutting their authorized tariffs to transport gas. And we've had an interesting conversation with Atul Tiwari on this, who's representing that authority who decides these tariffs. And the big question really is, how did the company have such a different and divergent assessment of what their operating expenditure was? The authority, of course, has a much lower one, nearly 50% lower, and which is why they have authorized quite a steep tariff cut. Downgrade by a host of agencies, of course, has resulted in what you're seeing with GSPL today, 19% down, continuing to hurt. I was talking about Persistent Systems. On the face of it, top line, bottom line, better than expectations. But in their con call, the management has guided for lower margins than the street was expecting. That stock is 10% down, really hurting. Vodafone FPO is the other one. Vodafone is the other one I would talk about. Third day of the FPO. Nearly 3 times subscribed, as we were flashing last on the screen. Quite a bit of interest from QIBs. The retail book is not yet quite full up, and we'll be asking our experts as well whether the Vodafone FPO is still giving you an opportunity there. Nevertheless, stock is about down 3.5%. On the upside, I'd like to point out a Sterling and Wilson, something we talked about in our trade setup this morning as well. 10% up now on the stock, and staged quite a turnaround. What the management is telling investors and analysts after the numbers are out is that they're expecting an order book of about 8,000 crore rupees. They've basically swung in the pendulum from EBITDA losses to EBITDA profits and better margins. So Sterling Wilson is doing well. Voltas, and we'll talk a little bit more in detail on Voltas as well through the show. Good UBS note on Voltas with an upside of 40% is what they see. They've set a target price of 1,800 rupees on a UBS. It's up about 6.5% now. And the other one that we've been tracking today would be Zomato. They've increased platform fees. You and I will be paying them. The increase by 25% from 4 rupees to 5 rupees. And the stock has, of course, responded well, up 2%. So if you've, I suppose, Niraj, made money on Zomato stock today, you won't mind paying a little extra on that platform fee. And they've gone up consistently from 3 rupees to 4 rupees to now 5 rupees. So they're not shying away from doing that. Now it's on par with Swiggy, though. which is 5 rupees as well.
Yeah, well, and maybe this is just the start, and who knows what might happen to some of these platform fees as well. Restaurants may not be complaining too much because their businesses certainly have gone up as a result of this delivery pieces. But anyways, that's a conversation for another day. For now, let's talk about markets. Ruchit Jain, CMT lead research analyst at 5 Paisa Johnson right now to talk about the technicals and the derivatives as well. Ruchit, great having you. Thanks for taking the time out. Ruchit, I'm trying to understand, how do you think about today's move? Because it's largely been stuck at this 0.5% uptick for the Nifty and the Bank Nifty as well, despite HDFC Bank doing what it is doing. Is there some cue that you can take which will enable you to make a trade on either the Nifty or the Bank Nifty?
Yeah, hi, very good afternoon, Niraj. So Niraj, if you look at last 1.5 weeks move, initially we saw that very sharp decline from 22,750 to almost 21,750, which was in a span of just 6 trading sessions. And generally, whenever we see such down moves without any meaningful pullback move in between, the momentum readings goes in oversold zone. And that's what had happened on last Friday when we opened gap down. The RSI readings on the lower time frame charts were too oversold, which led to this bounce back move. Now the question is whether this is a resumption of the uptrend or just a pullback move. Now the data is not that optimistic as of now. If you look at the FIS data, before the start of this correction, they had around about 57-58% positions on the long side, but they have formed very aggressive short positions in this last 1 week of correction, where their long short ratio has now declined to 35% only from 57%. So I think only 35% long position, 65% of the positions on the short side. As of now, no signs of that short covering in spite of this pullback move that what we have seen. Of course, we need to see today's data, which will come in the evening. But for now, since because of these short positions, we are thinking that the markets can go through some corrective phase in the near term, which could be a time-wise correction, if not price-wise correction. And markets usually stops this up move around the retracement levels. So we have completed the 50% retracement mark today of this entire 1,000 points correction, which we saw. That 50% levels was around 22,280. Right now we are trading around that 50% mark itself. Even if we surpass this, then we could see another 100 points up move, which would be 22,400, which would be 61.8% retracement. So I think it was a good trade to go long on the index on Friday, where we were oversold. But right now, today, after this 140 points up move, I think the risk reward ratio now is not that favorable to create fresh longs in the index. The good thing is that the small cap index, if you look, has not corrected much comparatively. Generally, whenever the market tends to correct, small cap stocks correct no more. But this time, the small cap stocks have shown a relative outperformance. The index is also in last 1 week during last week was only 1% compared to 1.5 quarter to 2% in the Nifty index. So I think this is an indication that you might get good stock specific trades if you are a short term trader, but index should be traded when it comes around the support. Right now, if it has already seen a pullback move, we are around that 50% mark. Even 61.8% is just 100 points away. So that risk reward ratio is not great to create fresh longs index. So we are advising to go trade with more of a stock specific approach here rather than taking any directional bet in the index.
Ruchit, good afternoon. Let's begin with your picks in this market. It's, I think, rewarded those who had some faith and patience on Friday. But what would be your top picks today, this afternoon?
So a couple of recommendations on the long side, but I would be more look for stocks which are a bit of low beta ones. One is a buy call in HUL. So a bit of underperformance has been seen in the stock in last few quarters. But if you look at right now, the stock price has already seen some good correction. Trading around the support, and there's some positive divergence in the RSI where the price has formed a lower low, but RSI has formed a higher low. So we are anticipating a pullback move in HUL in the near term. Short-term traders can go long over here as the risk reward ratio is favorable. Keep stop loss below 2150, potential targets around 2380 to 2400. And Raymond is the second pick, which is a breakout trade. On Friday's trading session itself, we witnessed a consolidation breakout, which was supported by very good volumes. So this should lead to a sustained up move in Raymond. So one can go long over here as well, with stop below 1930 for potential targets of 2240, followed by 2300.
All right, that's as far as Raymond is concerned. One of his picks, one of Richard's picks today. Pankaj Pandey also with us. He's head of research at ICICI Direct. Very good afternoon to you, Pankaj, and it's turning out to be a good afternoon indeed. I just wanted to start by getting your view on the Vodafone FPO. Finally subscribed about 3 times, which is not half bad for an FPO this size, for an issue this size. Your QIB interest was pretty decent. For those who still see an opportunity coming in, do you see worth it betting on a Vodafone, or would you prefer to do an Indus Tower play?
So hi, good afternoon. Thanks for having me. I think the challenge for us is that one of the key competitors is in our restricted list. So directly, indirectly, I wouldn't want to sort of comment on this because again, it would sort of imply some kind of a directional bias. So I'll sort of refrain from giving a comment on this particular question.
Understood. No issues, Pankaj. Just wondering, Ruchit, what do you think about Vodafone?
Technically, the trend is not much positive for Vodafone Idea. We have seen that in recent correction also that 14.5 was acting as a resistance. But on the lower side, good support is there around 11.5 range. So I think it's more into a consolidation phase. We need to see a breakout above 14.5 or 15 levels for any kind of sustainable rally in the stock. Otherwise, I think there would be some volatility. You would see some buying interest whenever the stock approaches that 11.5, around 11.5 range. And at that higher side around 14.5, you would see selling pressure again.
Okay. That's as far as the Vodafone story is concerned. But the stock of the day, and not for a very positive reason, but one way or the other, is Gujarat State Petronet. The stock has hit a lower circuit, and the reason's not far off to look at. Regulatory concerns now at 19.37% down. It's lost 73 rupees just today. So the regulatory board for the space has cut their pipeline transmission tariff by 47%. Why has this happened, and why has the stock reacted so negatively? Mihika is joining us with more.
Yes. So the Petroleum and Natural Gas Regulatory Board has cut the tariff of one of the key Gujarat pipeline networks of Gujarat State Petronet by 47%. Now the authorized tariff is at rupees 18.1 MMBTU versus 34 rupees previously, and this is also much lower than the 51 rupee tariff that GSPL had claimed. Now in terms of impact, while it could lead to lower end user prices for both household consumers as well as industrial consumers, it could put a pressure on Gujarat State Petronet's profits. Now, the reason why the difference between what was asked and what was actually authorized is because the Petroleum Natural Gas Board's assumptions when it comes to volumes, capex and opex is very different. When you talk about the capex, Gujarat State Petronet claimed a capex of 3,400 crores, while the board only allowed 1,800 crores. In terms of volumes, in terms of future volumes, while the company assumed 26 million metric standard cubic meter per day volumes in the future, the board approved much higher, 22% higher at 31.7 MMS DMD. And then after this tariff hike was announced, all the brokerages did turn negative on the stock. Now we had Nomura, which downgraded the stock to a reduce from a buy previously at a target price of 320, which implies a 15% downside from the previous close. They've cut their FY25 and 26 EBITDA and EPS estimates. EBITDA estimates were cut by 37 and 42% respectively for FY25 and 26. And they did say, however, that the tariff would be renewed next fiscal if the actual volume show considerable variations from the board's assumptions. And then lastly, we had Kotak, which downgraded the stock rating to reduce to at a fair value of 360 rupees, which implies a 22% downside. They believe that a 20 to 30% tariff cut was due, but the actual tariff cut was much above expectations. And they've also cut their FY25 and 26 earnings estimates by 28 and 37% respectively. And they expect the return on capital employed to decline sharply to 11 to 12%.
All right, so that's the big downer for JSPL, which is why you're seeing that stock reacting so negatively. But to understand exactly what the issue is, we spoke to A.K. Tiwari, a member of the Petroleum and Natural Gas Regulatory Board, earlier today, and we asked him about the mismatch in the expectations of GSPL when it comes to what their OPEX is going to cost, what their expenditure is going to cost, and what the authority sees. And that's one of the reasons why there has been a variance. What is the context of this? Listen in to what he said.
At present, I can say that there will not be any much variation, but it depends upon the GL. We have recently concluded the integrated tariff, so that we have already trued up based on the EIL capacity which are there and the other things. We will come up with public consultation and then we'll do. So I don't think means I can't commit that way.
Yeah.
But that will not be a variation.
So on an average or typically or ordinarily, you don't see such a big variation. Would that be safe to say?
Yeah.
All right, that's the PNGR, remember, and it has had some repercussions for GAIL as well. Okay, those are a few stocks at the start of the show. There are a clutch of others which we will talk about. We'll need to slip into a quick break, but up next we'll be joined by Mantesh Tabaran on the other side of the break as Vodafone Idea's FPO sees the full subscription. Talk about the impact of that in the moments from now. Stay tuned.
Hello everyone. I urge each one of you to exercise your right to vote. Your voice matters and all our votes shape our collective future. Let us make democracy stronger by going out and exercising our franchise. Jai Hind.
Welcome back. Well, market's looking good and all eyes on Vodafone. So the FPO has been subscribed about 3.5x so far. This is as of Q3 today. But the retail subscription is about 61%. QIB seem to have shown the most interest, 8.93 times subscribed in this segment. Is the Vodafone FPO a good idea? Remember, the company is trying to raise about 18,000 crore rupees, no small feat, for a player that has long been just about surviving. Mahantesh Tabaran, independent expert, joining us now for his take. What would you advise to retail investors who are watching, Mahantesh, and who would still now possibly get an allotment in that category?
See, Vodafone is not a stock that will run away with great upside. Between the current market price and the available offer price, there seems to be not much of an difference for any retail investor to take the bite of the bullet. What essentially is required is once Vodafone uses up these 18,000 crores kind of amount, what is it that they will be able to do in terms of network expansion, growth in terms of subscriptions, 5G introductions, etc. will matter more than really anything. Mind you, the overall debt on the company is quite substantial, including the AGR dues.
Mahantesh, what Vodafone has said so far, what the company has said so far is that from these FPO proceeds, they'll use about 12,500 for network expansion, 5G, etc. Some goes towards the AGR dues, of course. Do you think that's the concern that you're seeing in the market and in the stock price today? Whether there is going to be enough gunpowder to actually get into that telecom battle?
I think Vodafone has been steadily, improving its financial conditions. For that matter, the telecom industry has been battling out well in terms of ARPUs. The key metric to look at is the ARPU metric for all the telecom companies, and we are seeing there is a consistent rise in the ARPUs happening. With 5G coming in, there will be a jump up in terms of the overall ARPUs. Vodafone is not escaping that trend. It's not as if that the ARPUs of Airtel and Jio are rising and Vodafone is dipping. That's not the case. So from a fundamental direction, the improvement of financials is happening because of the ARPU improvements. And then you have this great infusion which helps them at least sustain growth ahead. Hitherto, Vodafone has been losing subscribers. But the recent phenomenon has been that there is the gross additions have now overtaken the subscribers leaving the network, basically attrition. So when you have the gross additions going up over the attrition numbers, they will start reversing the trend in terms of overall subscribers. So overall subscriber growth will come in, better network will be there, and there will be rise in ARPU. That tells me all three things put together, the financials of the company will improve. Now, whether they will be in a position to pay off those AGR dues, which are lumpy payments due next year onwards, that remains to be seen. But at least for the current time being, the company is doing really well in terms of the core financials, like any of the telecom players.
Okay. Mahantesh, just one quick question really. A lot of people arguing about whether Vodafone remains the better entity to bet on versus an Airtel or Jio. And one of the arguments is that the quantum of 2G subscribers, which will move to 4G in the case of Vodafone, much higher, and therefore the beta in ARPUs much better for Vodafone vis-a-vis the others. But there is a bloated equity to contend with as well. Looking at both of these, what becomes a better bet?
See, irrespective of the dilution that happens in a company which is already having a weak balance sheet, negative net worth, making losses, and having a huge debt overhang, that dilution factor doesn't really matter, because dilution factor comes into the picture only when you have a company which is healthy in its balance sheet, profitable, paying dividend. Then you start worrying why the upcoming dilution will actually make my share of profits lower as an investor. That's not the question which is uppermost in the mind of a Vodafone shareholder right now. What's the thought in a Vodafone shareholder right now is the company headed towards better financials? Will it become healthier as we go forward? Dilution doesn't matter in the interim. If that equity infusion overall helps support the balance sheet health, so be it, irrespective of the dilution.
All right, thank you for that, Mahantesh. Mahantesh there on the Vodafone stock overall saying that too much of an upside is possibly not something that investors can hope for anytime soon. Having said that, it's off its losses of the day and down about 2% now. Day's low is at 12 rupees 10 paise. The FPO price will be out shortly, but remember the range was between 10 and 11 rupees. So anyway, a discount to current market price. That's a Vodafone story for you, but so much more happening in the markets today. And, we'll come in a bit to detail of what's happening with the tech pack. But one stock that I really wanted Pankaj's view on is HDFC Bank. Now, Pankaj, we've been talking about how HDFC Bank numbers in Q4 were better than expected. It's a strong quarter usually, and seasonally supposed to be a strong quarter. Deposit growth, etc., was decent, but the stock has reacted fairly negatively. What would you do with an HDFC Bank right now?
So on HDFC Bank, we have marginally increased our target price from 1800 to 1850 at 2.4 times book value. Largely, our sense is that the NIM improvement is going to be sort of a bit slower. So from 3.44 to 3.6 is what we are sort of looking over the next 15, 18 odd months. And I think overall growth parameters are going to be okay, but I think the excitement element is sort of missing, and which is why probably the stock is not reacting the way one would have expected. And I think banking in general has taken a sort of a backseat, largely because of the strength of US data which is coming out, and that is sort of pushing down the expectation of further rate cuts, and which is a sort of a macro challenge for even domestically also in terms of the expectation of rate cuts. So I think so a combination of these is sort of weighing on the stock. Otherwise, I think our sense is that last quarter was steady, and I think the next 1 or 2 years, the companies are expected to sort of deliver a steady set of numbers. No major challenges on the asset quality side, and whatever healthy provisioning they have done, I think no major sort of negatives have sort of come out. So no major negatives, but yes, excitement also is a bit missing.
And Ruchit, is there any value right now in HDFC Bank? Do you see any upside on the charts? I mean, I've seen all kinds of target prices today, one at even 2,100 rupees, I think, one of the brokerages. So there is that optimism there, but what are the charts telling you?
During last quarterly results, when we witnessed that correction, the stock had corrected very sharply from about 1700, 1650 zone to 1350 kind of levels. But if you post that last 1.5 months, we have seen a pullback move. But this seems that the price-wise corrective phase is over. But it might go through some more time-wise corrective phase in short to medium term. So not expecting any significant run-up rally in HDFC Bank immediately in next few weeks or couple of months. But I think the stock would tend to trade within the range of 1600 to 1400, 1450 on the lower side. So in right now it's trading just around the center of this entire range. So in case if we get any kind of dips towards the lower end of the range, 1450, 1400, then I think that could be the range where one should look for buying opportunities, where the risk reward ratio would turn favorable again.
1400 is where the buying opportunity exists today. HDFC Bank, one of the top losers, and actually because of that, I mean, if you didn't have a HDFC Bank sulking today, you might have seen an even greater upside on the Nifty. NTPC, HDFC Bank, top losers on the Nifty. Very quick break. On the other side, we bring you a preview of the big numbers which are out after market hours today. Reliance Industries, and also all about the IT space. Remember, you have a reaction to Persistent, Wipro, and we get you a comparison between Infosys and TCS. All of that on the other side.
right, back with India market close. Some stocks which should be highlighted by virtue of the move that they're making intraday. So Phoenix Mills, and let's get the intradays of each of these on the screen. Phoenix Mills has just come off quite significantly from the intraday high that it made. It's just 0.5%, but it's trading at the lowest point of the day. Birla Corp should come up on your screen as well. The intraday of Birla Corp and 3.5% lower. Again, a stock which is trading at the lowest point of the day. Similarly for Cyient, which was actually doing okay, but not quite now and trading at the low point of the day. And Persistent Systems, which has been a big newsmaker today. You'll hear from the management tomorrow, of course, but 9.5% lower. It's a case of a stock which has done so well and priced so much to perfection that disappointments, if any, tend to bring about that. And I think the flattish margin guidance, maybe the guidance around FY25, and we'll talk about that a bit later on, putting paid. On the flip side, just one stock, Lloyds Engineering, just want to mark that. And let's look at the move today in Lloyds. It's 18% higher, 64 and counting. Big mover, really. It's Lloyds Engineering. You heard from the management a couple of weeks back on the channel about what their plans are and what could happen. But this is a serious move in Lloyds Engineering on very high volumes, I might add. Richard, very quickly, Lloyds Engineering or Lloyds Metal.
I think Lloyds Engineering certainly looks attractive because the kind of volumes that the stock is seeing, even after the significant uptrend that we have seen over the last few years, but still no signs of reversal. RSI post the corrective phase has again given a positive crossover. So according to retracements, we should see levels around 73, 74 in the short term.
Okay. Well, we'll ask Pankaj about Reliance, but before we go to Pankaj about Reliance, let's get in my colleague Mihika, who tells us what's to be anticipated, because the expectation is that the profit will rise about 14%. Mihika, what are the key monitorables?
Yes, so I talk on a consolidated quarter-on-quarter basis. Now, revenue and profit is expected to rise. However, the operating margins could take a hit. Now, revenue and profit would grow on behalf of strong performance across all the three segments, which is oil and gas, retail, and telecom. Now, according to Bloomberg estimates, revenues may rise 5%. EBITDA, however, may fall 4.5% on a sequential basis, which could lead to a 180 basis points margin contraction. However, net profit may rise 14% to 19,727 crores. When you look at the segment-wise expectations, first we talk about the oil to chemicals segment, where Morgan Stanley expects the EBITDA to reach the peak in Q4, and this is the highest since June 2022. And this peak EBITDA comes despite this still sluggish margins in the chemical segment, and they also expect the gross refining margins to rise above the $12 per barrel mark, and this is despite the Russian crude discounts that India enjoys. When you talk about Reliance Jio, they expect strong numbers which are likely to be led by higher subscription additions as well as improved average revenue per user. Now, UBS expects strong net subscription additions at 10 million, and they expect a stable average revenue per user at 183 rupees per month. And lastly, it's the retail segment, where a boost in revenue and operating numbers, which will marginally and largely be driven by the store expansions. Higher footfall will also be a factor that will contribute to better performance. And according to UBS, they expect margins to rise 7% quarter-on-quarter, and they expect revenue to rise 22% year-on-year and 1% sequentially, and this will mainly be driven due to the store expansions that have been seen in the last 2 years.
Okay, thanks for that, Mihika. Pankaj, can results be a mover for Reliance Industries? It's not done too badly, shy of all-time highs, but can it do more?
So, Niraj, I would sort of suspect that because the overall expectation is that the margin pressure, especially in oil to chemical segment, is going to be there for some period of time. Unless that trend sort of reverses, probably things may not really sort of change much. I think potential trigger going forward could be another trigger, could be a positive trigger, could be if we get to see tariff hikes on the telecom side. So I think that could be a trigger, but I think that is unlikely to happen till elections. So I think post-election is what one can probably anticipate something.
Okay. So nothing much post-elections. Ruchit, I wanted to know your take on RIL. Any position you take ahead of the numbers?
I think the broader trend still remains positive. We have seen last 2 or 3 weeks the stock has gone through some time-wise correction, but none of the important short-term supports have been breached. Also, the price declines in between which we have not seen any kind of volume-based selling coming in the stock. So it just seems to be a time-wise correction within an uptrend. So better to stay with the trend if one has to take any kind of fresh positions in this. 2800 positionally becomes a very strong support for the stock. Since the month of November, the stock has not breached its 100-day exponential moving average, which is right now around 2800. So if any existing point long position, they should continue to ride this trend till it is above that support. Even fresh longs could be done selectively with limited quantity with same stop loss placed below 2800.
So selective fresh longs on our RIL. Of course, we'll see numbers later this evening. Now, talking about the results that we've been seeing so far, a bit of focus is warranted on the IT space. And we saw some interesting trends. Persistent Systems, for example, on the face of it, good numbers, beat on top line and bottom line. But post a management call, the stock has been showing heaps of pain, down about 10% right now. Likewise for Wipro, where it seemed very negative, but stock's doing okay. So what's going on? What is bothering investors? And, breaking down all of these key results and more is Rucha joining us now. She's tracking, of course, IT for NDTV Profit. Rucha, hi, great to have you on. Let's start with Persistent. Mm-hmm. So what was it in this con call that has spoke to investors?
So, as we all know, Persistent reported its results last night and revenue and profit was up. But what really upset investors is the margin. The company reported a margin at 14.5% versus estimate of 19%. Even above that, in the commentary, management mentioned that it will have this kind of margin at this levels even in the coming year at 14.5%, which is lowest in last 8 quarters. Now, this is because the travel costs were higher in the current quarter, and they have a lot of lateral hires as the fresher which they had already deployed. All the bench were utilized in the second quarter in itself. So this flat EBIT guidance is what has upset the street, and I think that is why
it's being described as a freeze, as a guidance freeze. Because
exactly.
It's just exactly the same.
Yes, it is a freeze for the next year. However, the management also mentioned that there will be a 200 to 300 bips increase in the margin over the next 3 years. So this essentially means that the next year will be muted in terms of margin, but the company has to pick up in the next 2 years, that is FY26 and 27. So this is the take from the earnings call which happened this morning.
Okay. Sorry, did I hear you say that the margin expectation was 19%? EBIT margin expectation?
Correct.
Was
yes.
19%?
Yes, and it came out as 14.5%.
Okay. So that's the disappointment for Persistent.
Yes.
Okay. The one thing that you would want to know from the management is the reason why the margins are being guided to flattish levels.
Yes.
Okay,
yes.
cool. Okay, so that's one. Wipro, on the other hand, as Tamanna was saying, while the results may have been whatever, the stock has come out smelling like roses. Why so?
So Wipro, I think that the street largely expected a negative revenue growth, but the company has reported a flat revenue growth. I think that can be a small reason why the stock is doing well today. And apart from that, people are really excited about what the new CEO Srinivas Pallia has to say, right? So during the call, he mentioned about the 5 key focus areas, and that hovers around the large deal wins and, strengthening relationship with clients, and then focusing on industry specific such as BFSI, which was again strong for the company.
But nothing new, na?
No, nothing new. The guidance is again muted.
So all the management commentary is pretty much the same with, I would say, AI ka tadka. Because now everything is about AI. But is this in a sense a honeymoon period for Srinivas Pallia? He's just come on board, expected that he will do new things, and maybe stability because he's an insider. Is the street basically reflecting confidence in now maybe some stability in this company?
So I think people are giving him that opportunity which people didn't give to Thierry, I think, right? That people are waiting, what can be new that this CEO will bring which Thierry didn't. So I think people are just waiting and just waiting for what this CEO will do for the upcoming quarter. So it's just maybe no positive, no negative is also a positive. So I think that is what is playing out for the stock as of now.
So that's the story with Persistent and Wipro. But we're also still breaking down what's happening with Infosys and TCS, and you have an interesting take on how you compare the two. Tell us about that.
Sure. So these were the two major clients which kicked off with the IT earnings this season. So firstly, we'll look at the FY24 performance on a consolidated YOY basis, wherein TCS clearly outperformed Infosys in terms of revenue, EBIT, and net profit as well. But here are a few points which might turn out to be in favor of Infosys going ahead. We'll move on to discretionary spends. So discretionary spends, as we all know, is under pressure across the industry. But what might work out for Infosys is that it has higher exposure to such spends than TCS. So in case there is a revival in discretionary spends, Infosys will have a more room to go up as compared to TCS. And in terms of valuations as well, Infosys is trading at a lower than its 5-year median PE at around 22, while TCS is near its 5-year average PE. This again states that Infosys is a cheaper stock than TCS. Moving on to looking at the 1-year stock performance of both the companies, TCS is largely at par with Nifty IT. However, Infosys has underperformed by 10%. This again means more upside than TCS. Now, what the brokerages are expecting across the street? For TCS, 58% of them have a buy, while 66% have a buy for Infosys. In terms of sell rating, 21% have a sell rating for TCS and 19% have for Infosys, and the balance have a hold recommendation. And lastly, in terms of upside, the consensus target price implies a 9% upside for TCS and a 14%, almost double the upside which TCS has. So I think the street themselves are very much bullish on Infosys as compared to TCS.
Thanks a lot for that, Rucha. Clearly showing in the way some of the IT majors are behaving post numbers versus others. Though for both of these names, post the results, the reactions were muted to marginally off, but Infosys currently about 1.5% higher. Pankaj, there are no compulsions for a retail investor to buy between a TCS and an Infosys, really. You can go out and buy all or none of the names or options out there. Is there an IT option that you're buying into?
So Niraj, between say TCS and Infosys, we are valued at 23 times. So we have got a target price of 1650. So it's a sort of a buy according to us. I think TCS, if we sort of even if give a premium compared to Infosys, I think the TCS even at 27 times is offering an upside of only 9 to 10%. So which is why that makes the stock hold. And I think overall, when you sort of look at the results which have sort of come about, I think Persistent, even if you sort of look at current prices, it's still trading at 35, 36 times 2-year forward. Even if you were to sort of bring the multiple down because growth rate is expected to be lower from say 14, 15% to 12, 13%, I think at best it can sort of become a hold, and that is where the challenge lies for stocks, which is sort of priced well. But Wipro, I think probably what is sort of getting picked up, or what we are sort of looking to sort of explore more, give more weightage is, especially on the consulting side. I think the order booking there has grown consecutively for the past 2 quarters. And that's a sort of an interesting pattern or trend which is sort of emerging. But in general, we are not expecting any major runaway moves in IT, given the fact that US interest rates hike or rate curves are being sort of pushed down. So discretionary spend is going to sort of take some time. One needs to be very selective within the IT. So for example, what we are liking is something like Mastech. So Mastech, while recently they have an order win, but overall sense is that they can sort of deliver a heightened kind of a top line and bottom line growth with multiples being okay. So I think one needs to be very selective in IT. We don't have a very, what I call industry-wide pattern where all stocks are going to sort of do.
Ruchit, of the 4 names that we've discussed in this segment, anything that you like, how would you rate them, rank them? Persistent, Wipro, Infosys, TCS?
Look at the relative performance, then TCS I think should be preferred over the other names. Although in the entire IT space there are no signs of bottoming yet, So I think stock-specific correction could still continue. But TCS relatively seems that downside could be very limited thereon, because post results what we have seen that the previous swing lows have not been break yet. And even 3700, 3750 is a good support range if you look at a bit of weekly to monthly charts for mid to long term. So I think based on just a relative outperformance, TCS could be preferred over other names within the IT.
Well, that's IT, and in some of these cases, it's interesting the moves that we're seeing, especially the larger ones which came out with numbers. And while the numbers may have disappointed, the stocks have done okay. Tech Mahindra is the case in point two, ahead of the numbers, by the way. The last 2 days, Tech Mahindra has had a good run. The question is, can it last? So let's wait and watch here. What else? Just trying to see some specific stocks. Wow, SR Shipping, some movement there. Credit Access Grameen has gained quite a bit in the session today. From the levels that it was trading at, Credit Access Grameen has now inched up. A bit of a spike in that stock. But the one stock, just before I get to that piece, just some updates on Vodafone Idea. I need to mark this. We've been talking about how the demand for Vodafone Idea is strong. Look at that. Overall subscription has now picked up 5 times as of 3:12 p.m. And I think the NI category or the HNI category is the one essentially which has had the maximum subscription. Not surprising, because we've seen them, some of the marquee institutions come in and put the money where the mouth is. But this doesn't surprise, because everybody's talking about how 2 days on a trot, or first 2 days, Vodafone has not seen any subscriptions. What's happening? Yeah. Suddenly we're seeing the pickup.
And retail, I think portion is still 70% subscribed. So a few minutes still left if people are interested. Though, a varied number of views of how high it can go. What I find interesting in all of this, Niraj, is I'm wondering, is the bet that when the AGR dues come knocking next year, that the government will show maybe a benign sort of a view to Vodafone, since they have an ownership there? Will they opt for more equity? And the fact that overall they've now been improving their financials, maybe that's why you've had that kind of QIB subscription at least. So not just fully subscribed on final day, but subscribed quite substantively. And all of that has happened just on the last day, in the span of the last few hours, as you mentioned. So Vodafone, definitely one story. Another story that we should focus on is Spark. And now what's happening here is quite astonishing. Lower circuit again. I want to pull up the last 7-day chart if we can, just to give you a sense of the extent of pain. Though frankly, I think Spark has been down at the lower circuit for more than just the last 7 days. Look at that. It's just in the last 7 days, the stock's lost about 18-19%, and every day it hits the lowest circuit. The question is why? What is the issue with it? And Varsha is joining us with those inside details.
Well, thanks, Tamanna, for that. So yes, Sun Pharma Advanced Research has locked it another 5% lower circuit today. Now with today's move, the stock is down almost 19% in last 5 trading sessions. Now this on the back of company halting their Parkinson's drug trial, wherein company had seeded phase 2 study on Vodafone, which is a drug to treat Parkinson's. Now company has completed review of 442 patients who finished part 1 of study by March 2024. Now the primary goal of the study was to show an improvement in the symptoms, but the study showed no evidence of treatment benefits in patients who received this drug. As a result, the company decided, to close the study. Now, the estimated peak sales of this drug is almost $5 billion US. Now, company did hold a con call wherein they said that they are going to out-license this drug, and there have been consistent interest from larger pharmaceutical companies. So this is basically the reason that we have seen lower circuit in last 7 to 8 days for this company.
So it's a Parkinson's disease trial with a specific drug which has come apart, but the punishment of the stock is extreme, perhaps because of how important an asset that particular molecule was. Pankaj, any view on a Spark, and what is seeing its consistent downtrend?
So don't track the stock, but in general, see, drug discovery is a sort of a very challenging issue, because you get outside gains and outside losses. I think a better way to sort of play that opportunity, especially from Indian perspective, is to look at CRAM companies. So you have companies which participate at various life stages of drug development, right from R&D stage to even clinical trials. You have CRAM companies which are sort of which offer services across various life stages of development of drug. I think that's a sort of a lesser riskier bet to sort of take. Probably one name which comes to top of my mind is probably Syngene. You have many more names. So I think CRAMS is a sort of a better opportunity, a better segment to sort of play and a drug discovery opportunity.
All right, Zydus Life Sciences, on the other hand, is having a good day. It's launched this Mirabegron in US. It's a delayed release tablet for urinary incontinence. Zydus is doing well. Ruchit, I don't know if you're tracking anything in the pharma space. We'd like to know that, and your BTST ideas.
So in fact, BTST idea would be from the pharma space itself, which is Lupin. So already 4% up, but we have seen that the last few trading sessions, the stock has seen some corrective phase, a bit of more of a time-wise correction, which you can say. In fact, it was the first week of February where the stock had formed a high for over 1700. Since the first week of February till date, we have not seen any kind of trended phase. And now, after that news flows which we have seen today, the price of move has been supported by a very good volume. So I think the stock could resume its uptrend over here. Risk reward ratio is quite favorable for BTST as well as short-term trades. One can go along with stop loss below 1560 and expect targets towards 1700 again.
Okay. Lupin is up, a clutch of other names are up, Metropolis is up today on the ticker. Of course, Exide is also showing that. Just look at the gains that have come into some of these stocks. Metropolis up 3%. The other one which has done well is Tejas and ITI. Both of these stocks, ITI is a PSU, Tejas is a Tata Group company. Tejas is up 17%. ITI is up about 12% or 13%. Some manic moves that we're seeing in the broader end of the spectrum. I wonder what the advanced decline ratio is, but I don't think the advanced decline ratio also today gives a correct synopsis of what the markets are doing, because I think there is some serious traction in terms of percentage points that each of these stocks are going for. Pankaj, leave us with one top investment idea from the mid cap or the small cap end of the market.
So, Niraj, today we have released a conviction idea on Patel Engineering with a target price of 80. I think this company is sitting on an order book of about 20,000 odd crores, 4-time book-to-bill ratio. Now, why we are liking this stock is that 93% of this, its order book is largely to do with hydropower, tunneling or irrigation. And I think our sense is going forward, government's focus on pump hydro storage or green, hydropower segment itself is looking very lucrative. And I think this company has got certain niche there. And which is why I feel that overall this company will deliver double-digit top line and bottom line growth. On top of it, our sense is that there could be probably they might be able to sort of get about 150 to 200 odd crores kind of arbitration claims. Plus, they're sitting on, I think, a land bank of nearly 2,000 plus acres, and monetization of that might fetch them about 1,000 odd crores. So that will make them comfortable even on the balance sheet side. So margin profile is expected to be decent at 14%. So I think this is one company which we feel that.
Got it. Pankaj, just very quickly, 30 seconds because we will wrap the markets. But Patel Engineering, it's an NDTV Profit exclusive that they'll be launching a QIP soon. Have you factored that in?
No, we haven't.
Okay. So apparently there is a QIP that is slated to come out at any point of time. But Pankaj, appreciate these details. Thanks. Ruchit, can we leave you quickly, 20-second view? Patel Engineering, it's a top fundamental idea. What about the technicals?
So technical structure is positive for the stock. We can see some momentum towards 70 to 72 in the short term, and stop loss for long positions should be placed below 56 rupees.
So that's the word on Patel Engineering. Stock already up 6.5%. They are they're launching a QIP, in fact, tomorrow. That's an NDTV Profit exclusive as well, and it's on Pankaj's list. All right, just a couple of minutes to close. Thank you so much, Pankaj and Ruchit, for joining us today, and I'll hand it to Niraj as he tracks how we're ending to a pretty good Monday, I must say.
Yep. So let me dwell on the large caps. Tamanna will dwell on the broader end of the spectrum as well. And we wrap up the day's trade on India market close 1% higher for the Nifty. In fact, during the close, I think the Nifty inched up. The intraday would be very interesting because this is a serious surge in the last 30 minutes of trade for the market. Look at this uptick that came into the markets in the last 30 minutes of trade. So sharp pullback, sharp pull up in the markets. Wonder if the broader market also did this. Mid caps and small caps should come up and then get the heat map up. So yeah, some bit of an uptick for the broader end of the spectrum too. But the last 30 minutes belonged to the Nifty. Get the heat map up and let's see which stocks have inched up and put some serious strength there. L&T was up 2.12%. L&T is up 3%. So I think that is one key heavyweight which is piled on the gains in the last few minutes. SBI might be other one. ICICI Bank probably picking on might be the third one. And I think what's also happened is that HDFC Bank, which was down close to 0.25%, is just about 1% lower. So there is a bit of the loss getting pulled back, which has also aided the index in terms of point contribution. Can we just get that and then Tamanna will wrap up the broader end of the spectrum too. But look at this. L&T, points contribution great, and Tamanna was speaking about how if HDFC Bank would not have done badly, the scene might have been different. I think it's doing a lot less bad than what it was at the start of the show today in terms of points contribution as well. So, but overall, good show, good solid breadth, and strong close for large, mid, and small.
Yeah, block deal in Bajaj Finance just a little while ago, which might have pushed that up, and perhaps the Nifty as well. But yeah, absolutely. Look at advances decline. Really good day. Let's pull up some of the stocks that have been doing really well and some that have been doing very, very poorly. So if I pull up the S&P 500 top gainers, that will be an interesting take to see that what has really worked today. Sterling and Wilson for one on good numbers, and a turnaround story there has done well. Gujarat Petronet is the loser of the day completely. Spark we talked about in great detail. Persistent Systems, not such disappointing results, but management outlook really disappointing. And this is really what struck me today, Niraj. If you look at three companies, Persistent, HDFC Bank, as well as Wipro, it's all about the management and the faith the market has in what that management is going to do going ahead. So Srinivas Palya, for now, getting a thumbs up, and some time. Persistent Systems, not so much, and HDFC Bank suffering and dragging down the markets to some extent because perhaps that faith on whether things will really turn around. So those, I think, were the big stories of the day that we saw completely pairing out. But all in all, a great day today. RIL results to look forward to in the evening. We'll give you a heads up on India Market Open tomorrow and what to expect from that big conglomerate as well. But for now, from Niraj, me and the entire team that's put the show together, thank you so much for watching.
We as professionals understand the importance of making informed decisions and often are advisors to our clients. Voting is no different. As citizens of this great nation, we have the power to shape its future. And one of the most crucial ways we can do that is by casting our vote. It's not just a right for every citizen, it's a responsibility. A responsibility to ourselves, to our communities, and to our country. So, I urge all of you to exercise your right to vote. I always ensure that I fulfill this duty to our country. Let's show the world the power of our democracy, the power of our collective voices. Together, we can make the difference. Together, we can build a better tomorrow.